Welcome to the end of day review for Thursday, the 21st of December 2023. Jumping into the economic calendar, as I had said in the London Outlook. Oh, just to say, actually, I need to apologize. I wasn't able to actually do the New York Outlook. However, I don't think it actually mattered too much as there wasn't really an entry point after the USD news release. But sorry, just to continue on my original train of thought, like I said in the London Outlook, there wasn't really any news to consider for the London session. However, what I did mention is that you want to be out of any trades, probably by the time of the London lull, but definitely before the GDP news release. So at least by New York Open, you probably want to be out of any trades that you were in during the London session. I wouldn't necessarily hold any trades during GDP just because of the nature of its significance. In terms of the actual news release, as you can see, GDP was negative for the USD, supporting long opportunities. However, unemployment claims came in positive, which then supports selling GU, which is somewhat of a mixed bag, and the results isn't conclusive. So in this situation, the best approach is to actually just trade what the technical analysis is telling you, and not to worry too much about the news release. Also, the thing about saying one news release is more important than the other is it's hard to say conclusively that one is better than the other, or one holds more bearing than the other. You could have an instance where you know the unemployment claims will actually hold more bearing, even though from a significance point of view GDP should be more important, but to be honest, you never truly know. So yeah, I just wanted to mention that. And then in terms of actually trading, what you can see is we're still in this confirmed bullish market trend. Like I mentioned in yesterday's EOD review and this morning's outlook, we have validated the primary leg, and as a result of validating the primary leg and the fact that we didn't actually have support for shorts, it essentially meant that we had to trade based on the primary leg, and there wasn't really necessarily scope for actually generating a secondary leg. And then what happened is this morning, we essentially, or late last night, just before the current day, we actually wicked this low, and that reset the primary leg that was built here, allowing us to find a new primary leg right there. Yeah, and essentially what I do want to highlight here is the fact that there was this entry that I did have set purely because of the fact that we have this previous day low of the day, which we can anchor our Fibonacci to, and then we essentially have an area to trade from. But I guess there was something I failed to mention in the London Outlook that I took into account before this trade was triggered, is actually the fact that technically we have no 15-minute POI to actually support entry from this level. Because remember, the requirements for entry is that you actually have a POI, a fib, and ideally liquidity in the leg. And this liquidity in the leg is not valid for the fact that there was actually this liquidity in the leg. And then in terms of actually validating an option for potential liquidity, we could maybe say the Asia range liquidity was the liquidity. But then we also had the option of looking down on the 5-minute and seeing, okay, is there an unmitigated level right here? And you can see there was, which is why this was indeed a valid trade idea. It's just something I failed to mention in the outlook, but this trade was valid nonetheless. As you can see, we actually then took a loss from here because price came down and didn't really respect this. We then wicked, and At this point, it was kind of inconclusive because we were still building this week and we had to wait for um, 12 p.m. essentially to actually validate that, hey, hold on, we actually just wick this level, it's not body broken, so this primary leg is actually at play. And then from a 5-minute perspective, you can see we have the change of character right here, and then we validated this primary leg. And what you can also see is the reason I entered where I had is because there is indeed this WIMB level right here, and it just made a lot of sense to use this entire range and actually get into the trade as such. And oh yeah, and then what I did want to add is the fact that, like I said, GDP news was coming out, and you probably want to be out by the lull. To be honest, things were looking quite good. So by the time the lull came, I was like, okay, we at 2 hour roughly. It makes sense to hold to at least 3 hour days time. Well, 2 hours actually to actually reach the 3 hour, and then yeah, of course, like I said, we don't actually know what the GBP news release was, so holding this is a bit of a gamble, to be honest with you. So I closed the trade out at 3 hour. I thought it was a good idea to pay myself. Also, the fact that we're on the 21st of December, I mean, by this point, volumes will start to die out, especially tomorrow and the entirety of next week. So yeah, I thought that's quite important. I exited this trade, and then obviously we had the news release, which was a mixed result. But yeah, because it was a mixed result, we could simply just follow the technical analysis and then essentially look to get into another entry. But as you can see, price pushed up, and at this point we already moved 80 pips for the day. So taking another entry after price moved majority of 80 hour, I'd say about 80% of the daily range, simply doesn't make sense. But yeah, that's the end of the outlook. I will overlay an EOD technical analysis for you. But other than that, hope you had a good trading day, and we'll chat again for tomorrow's London outlook.